Hello, it's Robert Miner with Dynamic Traders Group with this week's DT 5-minute update and trade strategies. I'm going to take a little more than 5 minutes because I've got a little piece of audio that I've taken from what I did the regular video for subscribers, which is usually around 20-25 minutes each Saturday. But there's a little bit of talk there about bear markets, panic markets, that sort of thing that I think might be helpful for you in the weeks ahead. So I've taken a few minutes of that out. I'm going to make it a part of this before we take a look at some specific markets and some trades probably coming up this coming week. So let's take a listen to that for a few minutes, and maybe you'll gain a little bit of understanding on bear markets and panic markets that might help you out in the weeks to come before we get to the specific potential trades coming up this week. What about this big rally on Friday? Oh boy, turned around, came up, over 200 points on Friday. Does that mean this is a correction, ABC correction, it's all over with? Well, let's talk about just some logic and practical thinking here. I've been doing what I'm doing here since the mid-'80s. So I've been either writing an analysis report since I think it was 1985 when I began, and plus an educational report and some educational materials. I wrote the first home study futures trading course back in the 80s. Be near the 88 or 89, I think is when I released it. 89 is when I released it. So I've been doing this a long time. So I've been through at least 3 major corrections and panics. The 1987 panic, the 2000, of course, into 2002, and then the 2007 into 2009 panics and bear trends during that time. So I'm going to talk about just a couple of things of a little bit maybe how to think, as well as maybe think about not even consider trading for a little while until things settle out. Is that number one, this too shall pass. In all cases, we get the doom and gloomers and that the world financial and economic system is going to fall apart. Well, it never does. We have this panic for one reason or another. Sometimes it lasts just a few weeks or a few months, sometimes up to about a year and a half or so. That's about, I think, the longest of the recent ones anyway, during my lifetime. Market turns around, eventually makes new highs, contrary to all the doom and gloomers and the scary people out there. So, and that's what's going to happen this time as well. It's just a matter of for how long it goes on and how deep. And the other thing is, it frequently goes longer and deeper than what we think. And that's what drives people into such fear and despondency, because it's not just a typical correction of 10 or 15% or even 20%. It can get to 30, 40, and a 50% decline. And that's scary for people who have the majority of their wealth and pension money in the stock market. So this too will pass eventually. If you got enough years left in your life, you'll be seeing new highs eventually. It depends on your age, on how to look at this. The other thing is, a market like this, it's news and fear driven. So does this mean this Friday that we've turned around? Probably not, because it's not going to solve anything. And they're not even talking about it solving the problem. What they're looking at is slowing down the problem in the months ahead. So it's going to get worse before it gets better. And we all know that. That's no secret that I've got. I'm not an expert on this. You just listen to the experts that are talking about it. And what they're looking to do is slow down the contagion and get the medicines out there for tests and all this. But no one's saying that we've got the solution to this problem. And everyone of authority, at least, is saying it's going to get worse before it gets better. What we want to prevent is it getting much worse. So more than likely, we've got a ways to go on the downside. So I wouldn't get too enthusiastic for some time yet until we have just a clear, very strong technical signals that the bottom is complete. And I think we're quite a ways away from that. When I mentioned taking out the 2018 low, I suspect we're going to do that. But again, I'm just mentioning it those levels to you, because those will be very newsworthy levels if they're taken out. So you have to make the decision on how exposed you're going to remain in the stock market. I'm going to do the best I can to give you the best information I can for people that want to continue to trade. From my point of view, I've traded this on the downside a bit. I even traded that what I got labeled a wave 2 or B advance for a couple days, because I've been doing this a long time, and I also know when to trade really lightly and either minimal leverage or unleveraged. And so I hope that you know when to do that too, and not put more at risk than you are comfortable with putting at risk. So those are all decisions for you to make. I will continue doing the analysis to the best I can, and trying to identify where I think are good trade opportunities, and I hope you take advantage of those. But the other thing I wanted to mention before we move on to the other markets is, in the months ahead, there is going to be an enormous opportunity to get on the long side, to get back in the market, or to add to positions, or however you want to look at it. Sometime in the months ahead, when we do bottom out on this panic decline and the panic is over, and it'll be at the time when everyone's given up. Most of us who have read anything about financial histories know that most of the liquidation is done near the end of a bear trend, just as most of the buying is done near the end of a bull trend. So when there's panic in the streets, that's when we want to kind of wake up, check out the market, and have our powder dry, so to speak, because there will be just an enormous opportunity. And it's probably several months, could even be a year and a half down the road. But that's really worth waiting for. So keep that in mind. If the market continues lower, as I suspect that it will, that there's a point it's going to be over, and there's a point where it's going to be a great opportunity, and most people will not take advantage of that opportunity, because they're the ones who are going to be throwing in the towel near the end. So I'm looking forward to that opportunity. Well, this is the ES Daily Data, and my cursor, that's on last Friday. And if you were listening to our last Friday's brief video we did for YouTube, is that I mentioned that it looks like the stock indexes were about to roll over and continue to the downside in dramatic fashion. That's exactly what occurred throughout this past week. Now, what about Friday? Have we completed a significant low and we're turning around and going to begin a bull trend? Probably not. Technically, the market, we hit the March 12th to 13th time target for a low. We made a fairly substantial reversal. Our daily momentums made bull reversals. At the best, I think we're going to see 2 or 3 days of sideways to up. We will not, or should not at least, if the major trend is still bearish, as I suspect it is, should not close above 29.51 before we continue lower. This, of course, was a news event, and a news event with no real fundamental background to it. That more likely the trend is going to get worse on the bear side before we make any kind of significant low. So that's what I'm expecting early next week. Well, here's a gold weekly, and big down week this past week in gold, as well as silver has been relatively weaker, and of course the GDX just fell out of bed completely. Those of you who paid attention to our short videos the last couple of weeks, and particularly if you're subscribers, you're prepared for a bear trend over the next few weeks to few months, because we explained to you really clearly in the last couple of weeks that this is probably the end of a wave 5 of 5. In Elliott wave terms, that means a top that's going to last several months. So those of you who believe that gold is where money goes, flight to safety in difficult times or turbulent times or uncertain times, well, you just got schooled, because that's not the case, and it hasn't been the case consistently ever. So just because there's a bear trend and some panic in some of the financial markets doesn't mean people are going to move to gold. Frequently, it's a time of liquidation of all assets sometimes forced liquidation. So anyway, gold ought to be sideways to down for a few weeks. So it's not a time to be buying. We've just begun a correction that's probably going to last several weeks, potentially even several months. Boy, if there's ever a time for you to consider a DT Report subscriber, to become a subscriber to our reports, now's the time, because a lot of these markets are going to be doing just the opposite of what many people think they're going to be doing. So think about that if you want to get updated every day. Okay, let's take a look at another market, and the one that I think is going to be the best trade of this coming week. Well, this is the euro, and the euro is unfolding just as anticipated in the last few weeks. Is we had this five-wave advance into the top of early this past week, and then that should be what in Elliott terms is wave 1 or A. We should be making a wave 2 or B correction. What follows a correction? Well, a resumption of the trend prior to the correction to a new extreme. So we've got some very, very significant and specific time targets to complete a wave 2 or B correction this week. They're all centered right around the Fed announcement on Wednesday. I've showed in the past how the euro is a market that most frequently makes trend changes right around the Fed announcement. So Fed announcements Wednesday. Tuesday is the 100% low to low to low, and then between Monday and Wednesday is the 38 to 62% time retracement, the typical time target for wave 2 or B. And our daily momentum reached oversold on Friday. So we're within 2 or 3 days of, at least we probably are, of completing a wave 2 or B corrective low. It's going to be a great setup to get on the long side, whether you do the Euro Forex or you do FXE or some other vehicle that tracks good with the euro, and of course inversely to the dollar. Great, probably at least a great setup this week following the next DT oscillator daily momentum bull reversal, which is likely by Wednesday. That's what we're going to be looking at. It's one of my favorite markets to trade, and especially when we get a kind of ideal setup like this, because the capital exposure is so little to take advantage of this position. So that's it for this week. I hope you'll consider a DT Report subscription. If you like what you hear on our short YouTube and Twitter videos, check out DT Reports at dynamictraders.com. Take care. And it's going to be another volatile week, so get prepared, have some fun, make some money. Over and out for now.